Over the past 2 years on this channel, we've made very good money by buying undervalued stock. For example, Meta when it was under $150 per share, which I recently sold at around $700 per share, although I was criticized for it, although it's doing very good at the moment, for over 500% gains. SoFi Technologies, which I bought on the channel under $8 per share and recently sold at around 26, so over 300% gains. Even Alibaba under $100 per share, again 100% gains, or American Express, also with more than 100% gains on the investment. Today, I want to explain why I believe Adobe is in a similar situation to those stocks and how it can provide some very good returns. If we take a look at the stock price, it is down 35% in the past 5 years, and it reached an all-time high of $688 per share on November 2021, so sentiment is currently horrible around this stock. Now this happens to companies such as Meta, for example, which when it was under $150 per share, people thought they were spending too much money on the metaverse, or when Alibaba was under $100 per share just because fears around Chinese stocks. So today, the sentiment around Adobe is horrible because fears that AI will replace Adobe. Now, if we take a look at Adobe's fundamentals, they haven't stopped growing. Revenue has grown from $5.8 billion in the past 10 years to $23 billion currently, and they are currently growing at around 10% per year. Now, if we take a look at their profit, net income has also seen massive growth from $1.1 billion to $7.1 billion. And one thing that I like is that they have even more free cash flow, currently at $7.8 billion. Now, because this is a software company, their margins are insane. Gross margin almost at 90%, profit margin at 30%, and again, a higher free cash flow margin, currently at 36%. Another big positive about their financials is the number of shares outstanding. As you can see, they are heavily buying back shares as the stock has gotten cheaper. This is amazing for investors because you own more of the company and you have to share the profits with less people. This is going to drive earnings per share massively in the future. And even though there are tons of fear around AI, if we actually take a look at the financial forecast, Adobe is still expected to grow revenue in the next 5 years from $26 billion to $35, so around mid-single-digit revenue growth. Now, as far as profit, from $23.96 per share to $33.66 per share. So, Adobe is still expected to have good growth both in profit and revenue, despite fears, according to analysts. Another very important statistics about Adobe are number one, the balance sheet, as they have $6 billion in cash and only $6 billion in debt, which is nothing for a company that has a market cap of $127 billion, as they have basically no debt. Now, another very important statistics is the return of invested capital of 28.32%, which is very, very high, meaning it is a company very effective at reinvesting the capital in its own business. So we have a company that is growing fundamentals, but the stock price keeps getting lower and lower, so the stock is getting cheaper and cheaper. This is a very good place to start looking for stocks that deliver amazing returns. Now, the only question that remains, because remember that being a value investor especially, means that you have to determine what is a good price to pay for the company. Now, Adobe is currently trading at a forward P of 13. But in order to take a deeper look at the valuation, I use my Google Sheet or a discounted cash flow model. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $288 per share, middle $389, and high $515. And the stock is currently trading at $305, meaning that if my low assumptions occur, you're going to get around a 9% annual return on your money, middle 14.6%, and high a 19.9%. Which are very good returns, because keep in mind that the market gives you around 10% per year. So in order for you to justify buying an individual stock, you need higher returns. This is why when I calculate intrinsic value, I always put a 10% return on my money. Now, as far as my assumptions, I believe they're actually very conservative, as I have the company growing revenue between 5 and 8% over the next 7 years, which is what analysts are expecting. I assigned the profit margin and free cash flow margin of 28, 32, and 36. And keep in mind they are currently doing a free cash flow margin of 35, so I went extremely conservative. And I assigned the PM price to free cash flow at the end of the 7 years of 16, 18, 20, and I also assume they buy back 1% of their shares annually. Also, keep in mind that they are buying 5% at the moment. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And in investing, anything can happen, but it's about playing the odds. So for example, if in my portfolio I have 10 companies like Adobe, I know I'm going to do very well in the future. For example, another company I own is PayPal, which has the same similar story like Adobe. Sentiment is horrible around this stock, the financials keep improving, analysts still expect growth, and on my discounted cash flow model, it looks even better than Adobe. So the point is, I believe the risk reward in Adobe is very attractive. And if you want to check out other videos on my channel, where I explain more in depth why I believe AI will not take over Adobe, you can check them out. By the way guys, if you want a discount on stockanalysis.com, which is where I've shown all the stock data, you have my code in the description. They also have a completely free market newsletter. Also, if you want to check it out, I will leave in the pinned comment below. I hope you found this video valuable. Let me know what you think about the Adobe stock in the comments, and I'll see you in the next one.